Indians are rationally emotional. We are not emotional for the sake of emotional. We have an attachment to the property because we believe in our roots, where we came from. Reverse mortgage is exactly the reverse of it, like in the name suggests. But it is the last resort of all possibilities that you have done when you give away your property. The ninth method is a reverse mortgage context. Now, this is not a common context in India. It's a Western concept that is now few companies and few banks are proposing. I don't think this works for the Indian mindset because Indians are rationally emotional. We are not emotional for the sake of emotional. We have an attachment to the property because we believe in our roots, where we came from. We typically also never sell a home or a land that we have in our ancestral place because we believe that allows us to have that insight. Now, reverse mortgage is a simple concept. Like you buy a home loan where you say that I will put 10-20% first and the rest I pay over 20 years to the bank at a fixed amount. Reverse mortgage is exactly the reverse of it, like in the name suggests, that the bank will come and sign an agreement with you and say that we will give you a fixed income over 20-25 years. Now, there are some challenges to this. One, that you can only do this with a fixed bank which you can trust, a bank that will be there for 20-25 years. So I would not suggest a small bank. I'll only suggest a nationalized bank, nationalized large banks, or large private banks which are well known and you've had dealings with them for many years. So that is one. And second, what happens if there is an unfortunate condition between those 20 years that the bank is supposed to pay a monthly context and something happens to you or your partner together? Then for the children to collect that money, yes, the bank is liable to pay an amount to them, but it gets more complex. Now, this is only for somebody who has no investments available to withdraw from or does not have any means for substituting their income, or the children are not supporting and the real estate property is the only one. And the reason this applies in the US and other markets like Canada, Australia, even Europe, is that typically families are separated. The parent's income is parent's income, the children's income is children's income. Unfortunately, in our case, the children's income is their income and the parent's income is the children's income. But that is what is the nature of today because our expenses have gone up and our income does not match with the opportunities to invest, which I think is a different debate which you all have with your children all the time on how much they spend. But reverse mortgage is the last thing to consider. It's not an Indian phenomena and I don't think it will remain it. So study it. If it's applicable to you, read about it, talk to the bank about it. But it is the last resort of all possibilities that you have done when you give away your property, because by the end of it, the bank will own it and not your children or even you. So think about it. These are 9 ways that you could have saved. Happy to answer any questions in the comments.